This video is about the quarter 3 results of Vaibhav Global Limited. Revenue from operations was up 9% to 1,066 crores in quarter 3. Operating profits were up 24% to 136 crores. Net profits were up 41% to 90 crores. US quarter revenue was 593 crores, up 9%. UK revenue was 32 crores, up 8%. European revenue was up 14% to 118 crores. Revenue from manufacturing activities was 345 crores, up UK revenue was 301 crores, up 8%, and Europe revenue was up 14% to 118 crores. Revenue from manufacturing services was 345 crores, up 9. US quarters EBIT was 73 crores, up 5%. UK EBIT was 32 crores, up 40%. Europe EBIT was up 454% to 9 crores. Unit EBIT DA from manufacturing service location was 27 crores, up 51%. The company had a very strong performance in December quarter with revenue growth slightly ahead of its guidance and consolidated net profit crossing 1,000 crores for the first time. Performance during the quarter was achieved despite tough geopolitical conditions. Gross margin put 63%, up 170% and 70 basic points year on year, driven by strong integrated global supply chain. Digital contribution was 42% of business to consumer revenue, and the company is on target to achieve 50% digital contribution at the end of FY27. Its in-house brands reached 48% of sales contribution during the quarter. The company is achieving 50% sales milestone before the target of end of FY27. In the US, it entered the quarter on a strong note and revenue growth of 3% year on year. This highly elevated precious metal prices and lower consumer confidence forced the consumers to defer purchases. The company started its in-house jewelry casting manufacturing operation in the United States to mitigate tariff on its jewelry shipped to United States. But the company suffered an increase in 89 basic points in its overall product cost due to tariff on other products. Despite that, the company was able to increase its margin by 30 basic points. The UK revenue was down by 1.8%, while Ideal World continued to perform strongly and grew by 12% year on year. TJC had a negative growth of 6% due to the overall softness in the consumer confidence with very high metal prices. The consumers deferred their purchases. This had an effect on the core TJC's growth. Ideal World continued strong EBITDA profitability, which was driven by highly overall OK's EBITDA margin improved substantially by 240 basic points due to dynamic product profile and operation efficiency. In Germany, the growth of 5.1% was achieved due to continued strength in its live TV commerce. In digital, it has seen signs of improvement, and the company is confident that it will start contributing, increasing to overall growth in German business. In the company, German business turned profitable during the quarter with EBIT margin of 6%. Company is on target to achieve full profit. Expectation Germany will start contributing positively to EBITDA margin from FY26. Its unique customers base stood at 706,000, up year on year. On a trailing TTM basis, there are 380,000 customers, while retention remained stable at 40%. The company's growth continued to remain guided by 4 clear priorities, which are expanding reach, new customer registration and expanding reach, new customer acquisition, retention, and repeat purchases. The company does revenue growth guidance was ahead of its guidance of 7 to 9% and is on target to achieve sustainable profit while maintaining its FY26 guidance, and I expect to achieve 9 to 11% growth in FY25-26 with EBITA margin of 10.5 to 11%. The business continued to generate heavy cash flows. Operating cash flows stood at 160 crore and free cash flows at 143 crore. The balance sheet remains strong with net cash position of 213 crores. The last 3 years, the company's sales have risen at a CAGR of 7% and net profit of minus 11%. But in the past year, there has been substantial improvement at 9% growth in sales and 11.46% growth in net profit. Promoters hold 57.11%, FIs hold 18%, 6% DIs hold 1.6%. On equity of 633 crores, reserves of 1,413 crores, and borrowings of 227 crores. At rupees 235, the stock is valued at attractively at a P of 19 on trading earnings. The dividend yield is quite attractive at 2.54. The stock has given negative returns of 4% in the past year.